Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Brianna Valesky, and we have Scott Redler on the line. He's Chief Strategist at T3 Live and T3 Trading Group. Scott, are you well-rested this Monday morning?
I'm kind of well rested. I did a Spartan race with like 15 guys in a team over the weekend, but all is good and no one got hurt, and we're feeling pretty pumped to enter a new week after getting up over about 30 obstacles on two mountains. So now it's just time to get over some market obstacles as we approach the week.
Yeah, and we got a few coming up here. Let me first pull up the chart of the S&P, and you sent this to us. Wow, what a quick drop on Friday. Waiting for the buy the dippers to come in. You had to wait a little bit. First, let's talk about your trading action on Friday, and were you able to turn it around here late in the day? We believe it or not, we are now over 20 handles over that low that we made on Friday.
I know. We kind of categorize this market with air pockets and spurts. And then if you miss the air pocket on the short side, you can't get it back. And if you miss the spurt on the long side, you tend not to get the second or third move. It happens all at once. And I know last week I was pretty positioned thinking that there was a good chance we'd get above that 2100, to be honest. And all of a sudden, Thursday, if you remember, we had that first gap down that got absorbed and we went kind of green. And on that, I sort of lightened up a little bit. But then I don't think anyone was really expecting the big down move that we saw on Friday. So as a trader, you have to figure out your time frame and reduce things quick if you can, or salvage things quick. And that's kind of what I did on Friday. I got out, with a few bumps and bruises, but nothing too bad. But again, I don't think anyone's really getting what they want, because I know about 10 minutes before, everyone in my VTF was like, Red Dog, what are you doing? You buying on day one down? Or are you going short overnight for more follow through? And I was like, listen, I'm not oversold. The oscillator is like minus 15, not minus 50. The market's not broken. It's just a little bent. And we have earnings coming up. So unless you have a short thesis, I'd be careful. And unless you love a particular long, who knows if day one down leads to day two, day three. So I come in this week relatively flat-footed, just with some leftover options. And I'm going to figure out, what trades I can make and whether or not we finally get some traction to hold things for more than 1 to 3 days. Because if you do, in either direction, you're giving up profit, and you're probably not making any traction, because this range in 2015 has been getting a little, weary or long in the tooth, or whatever phrase you want to say. It's just the way it is.
Yeah, and it's a little bit frustrating, too, because you're thinking, you did get the nice bounce off the low, and you're thinking, well, maybe I'll get a chance to, buy it again at that low from Friday, which also coincided with some lows that we had back in, I believe, at the early April. And you don't. And then unless you're buying right off that 6 p.m. open last night, you're 20 minute, you're 20 points higher now. I mean, this is just kind of, for me, it's kind of hard to think about the long side here. Just this kind of a quick rebound. How do you like catch yourself? Like, I missed the buy on Friday. I missed it overnight. Now we're up here. I'm, the revenge trade, just going, full out short this market. How do you prevent yourself from doing that?
Well, with some self-control and a little discipline. A lot of people are probably coming in with short on the brain today. Saying, okay, with the action that we saw Friday, I'm just going to short the rally. But you really have to, this is when you consider your retracement rules. Retracement rules are meant to figure out the potency of a certain direction. And if you look at the size of the bar on Friday, it was pretty potent and engulfing to the downside. So if that bar has control, meaning more downside to come, the bears probably don't let the bulls reclaim that circled area that I have, which is like 2092 to 2097. That's probably the mid-range of Friday's area. So, a normal bounce back to retest, that would make sense. But if all of a sudden, Dow's up 130 points in the first 30, 40 minutes, which it will be, and then if it holds there and everyone fades that opening move, chances are if we go up 200 points and get that spurt, all of a sudden anyone who's, short into that area probably covers. And if you close above that, and all of a sudden you look at the chart and we just have a series of higher lows. You have, the low from the start of the year of 1990, and then you have the new low, another low of 2040, and then the recent low of 2070 from Friday, and then all of a sudden we're still making some higher lows and we still have that trend intact. So you can't really, really have short in the brain, but I don't think you go out guns blazing for a tremendous gap and go. So I think it's, again, very stocks, selective, and you got to pick your spots. And if, just say today's gap holds in the spiders, for instance, then, we could trade versus that gap for this week to figure out if there's momentum. If today's gap doesn't hold, then chances are, you might get more downside. So I think there's a lot of things to evaluate this week as with earnings, and just, have levels mapped out and play a little bit more of the extremes, because this market tends to push the envelope both ways and gets you out of your trade at either extreme if you start a trade too early.
Let's do a little revisionist history here before we go on from the earnings today for the rest of the week. Netflix, holy Toledo, blew people away. Was it something you were able to play into earnings? Have you played it since earnings? Looking back and looking forward in Netflix here. I know Barron's did come out with a little pun on the House of Cards, talking about them not fully discounting what they're paying for content. Michael Pachter echoed the same sentiment. But I mean, you could do all you want, say all you want, but you can't argue with the price of this thing.
You can never argue with price action. That's how you get put out of business. And if you remember back in earlier March when it was retracing a little bit, you actually said, would you short Netflix, or do you like Netflix short? I'm like, I tend to not think short swing too often in Netflix, and it's a dangerous trade. Not saying, I was saying, it could go long and right here for a great phenomenal earnings, because nobody truly knew, except for the price action was telling you people were playing it to go up, considering that it was near all-time highs right before numbers. So when people said, what kind of strategy do I use? I'm like, you could use three. One, you trade after hours. You have 485, which is the resistance pivot, that if you're short Netflix, chances are you're going to get squeezed, and you actually had a chance. And Marc Sperling, who's one of the head traders here, he got long Netflix. Within 3 minutes after the report, boom, traded through 485, held there, and then never looked back. So that was one trade. Then you had to trade above 540, which was the after-hours high.
Good.
That it opened, I think, in the 530s, traded through 540. That was a decent day trade for some. And then it was down with the futures Friday, and then it went red to green and traded through Friday's high. So you had three different pivot type of long trades if you wanted to do it. And now it's up $5. At this point, shorts are still, getting chased or getting squeezed. And I know Barron's had a conservative story on them, which they typically do. I think at this point you got to wait for them to set up and not chase it. But again, you can't take your own thoughts into a name like this. It's the price action. The price action's been very strong. It's punished a lot of shorts, and maybe at some point, it will go lower. But a lot of people who have been rolling up shorts, chances are they might not be able to stay solvent until their thesis is proved correct, and it has not been proved correct.
Right, it really had some follow through even with a weak market on Friday, and it's funny you're talking about those setups, and I was looking at the pre-market chart before the open, and I was looking, 530 support. If it doesn't hold there, it's going down. On the other hand, I wasn't thinking, 530 is great support here. Maybe try a buy with a 4 or 5 point stop. And then another good point that you made, when we point out the pre-market highs and lows, a lot of times you do get a continuation, and a great example in Netflix. Let's go to a couple of stocks that reported today. Morgan Stanley kind of following the trend with the big banks and the commercial banks here trading up. What's your thoughts on Morgan Stanley?
I was very bullish on it, last week, and I thought that they could have a report like J.P. Morgan and Goldman, where they're actually increasing their business, not like a Citi or Bank of America where they're losing business. But the question was, can it get follow through, and can there be momentum? Because there hasn't been that type of trade in the banks, for a while. Goldman Sachs gave you a glimpse of what could happen if banks trade well. They traded through 193 and through 195 pre-earnings, which made the setup poor for longs, because when they finally announced the earnings, they sold the strength and had it priced in. And then so today with Morgan Stanley, it's a little different type of trade, because it didn't trade through that 39 high prior, and it pulled back for 2 days heading in. So I think today will be interesting. for the banks, can Morgan Stanley hold the gap, and is it viable after the open? I'm going to look to buy Morgan, burst the gap in the first 15 minutes, and if it fills the gap and it can't go up on a solid report after pulling in 2 days below the prior high, chances are the market's just not that strong, and that they're not giving traders momentum yet. And they gave you a little bit in J.P. Morgan, but they also pulled that in pretty quick. So I know Morgan Stanley could be a decent gauge, today for the overall strength. If it goes red and Goldman goes red, chances are the futures that are gapped up 10, 11 handles are not going to have too much upside follow through.
Okay, and Halliburton popped on the fundamental news, but maybe being dragged down with oil here a little bit. Take a look at Halliburton, spiked up over $48 here. Now we've pulled back. I think I saw some lows from the last couple sessions in Halliburton. Is that on your trade radar today?
Probably not. A few weeks ago, I outlined the downtrend that was broken in Schlumberger. And then, Schlumberger actually reported a response, that was all the way down at 84. And then, went as high as 90, 92-ish before earnings. And I think that, this group is a broken group, and they've had some trades off the 2000 first quarter lows, the 2015 first quarter lows. I think if you want to be in Halliburton, I guess you could probably, where is it trading right now? I think somewhere close to 45.
No, it's up 50 cents. It had a pretty good pre-market range. Got a pop all the way up to 48.69, and then came down under 47 to 46.88. I was kind of looking at Friday's low. Wednesdays and Fridays lows were in the lower 46s, but if the SPOO's up 11, now trading up 50 cents, don't know if you're going to get a shot down there.
Well, maybe be long versus 46.38. It's been riding the 8-day ever since a few weeks back. And if you're trading it for that kind of trend, which is a momentum trend, I tend to like to be in things that are above the 8 and the 21-day. But if you look at the 8-day, if it happens to break that, which is right around that low of 46-ish, chances are that the 21-day doesn't come into all the way until about 44. So if you're just doing it for a trade, perhaps be long versus 46, but then if it broke 46 and closed below, I would just, get out of the way because maybe the retracement from lows is already over. But if it could hold that 46, maybe the stair step type of higher move that you're seeing in the LAHs, the XLE, Schlumberger, maybe it'll continue here with Halliburton.
Okay, I got to get your take on this one. Dead money for the last 2 years, a big stock in Warren Buffett's portfolio. Is this a sleeping giant here in IBM? I mean, you've had a consolidation period since October. 165 has been the level. Any take on IBM?
In my last 2 years, I've had a thesis, and I said 8, 9 longs and 1 or 2 shorts, and IBM actually has been the short. So thank goodness, maybe I was a little correct on that, not to, pound the chest or anything, but I've always had a pretty negative thesis on it. But down here, I don't really have a negative thesis on it. Some could say that, you have a big bear flag consolidation for a move lower, but it's coming so much. I would say, if you wanted to do something with this, if you wanted long side exposure, since it's so negative around IBM, maybe do a call spread. If someone said, you have to do something here with IBM, I probably would buy the 162.50 calls for Friday. And if they have anything positive, maybe, you get a nice move. And then, again, do it with options. It's probably going to be an 8 to 10 point move here. And, if you want to go against the consensus, because the consensus typically has been losing lately, maybe buy the 162.5 or 165 calls into the number and risk is premium paid. And if you happen to get the chance after hours and it's a solid report and they do a buyback and whatever, then maybe be a buyer above 165, and then there's room to get in the gap, which is in the 170s. But if they disappoint and they can't, and the buybacks are doing nothing, and who knows what Warren does, maybe he gets tired. It's definitely vulnerable. The chart's weak, but down here with the consensus real negative, I'd rather see you take 162 or 165 calls versus 160 puts or 155 puts.
Yeah, they probably want quite a bit for that spread, but we'll definitely one way to play it. At least you're selling a little bit of premium as well as taking some in. Some big earnings later in the week. I know you've been a big fan of Facebook. Had to rally up to the all-time high, 86.07. Pretty good pullback here, just above the 80, 81 level. How you looking at Facebook going into earnings?
I'm going to have calls. I think the chart's been real strong, and institutions would love a positive report or a good report showing growth, and hopefully they kept their expenses in control. I'm going to be going with probably the $84 calls. I bought a little bit last week on the pullback Thursday, not on the pullback Friday, and then I'll see where it is come Wednesday to see if I want to add to it. Typically, Facebook is tradable after hours too. Yeah, I'm going to have make sure I know 84 and 86 is the pivots. Can get above 84 and stay above 84, maybe you see 86. And then you have a pretty big trend line. If you look back multiple weeks, months, it's pulled back to that trend, which is, we're almost there, which is close to 79, 80. A lot of money behind this, and again, hasn't been public that long. And if you look at the blue chips out there, not to say Facebook is a blue chip now, some of them have gone up, 1,000%. Facebook is doubled, but that's really since the IPO price of 44. It's really done. So I think there's a lot of life left. I think WhatsApp's got a billion subscribers. You still have the virtual trading in that they bought. And I just think that this one's going to have a home north of 90 or 100 this year. It's just a matter of whether it's this quarter or next quarter. So for me, I don't take the stock into earnings. I'm going to have some kind of calls or long strategy, but I'm going to give it a few days to see where it is beforehand. At this point, I'm long some small, $84 calls, and then I'll figure out which strategy I want to go with depending on what happens the next 2 days leading into it.
Okay, another one reports later in the week. Google coming under some regulatory pressure from the EU. It's come off here hard off the 580 level. Kind of listing a little support here at 520. 500. You wait for 500. You take a nibble here at 520.
Yeah, it was really weak Friday. Like you said, put a double top in the 580. I'm not going to do anything with this in earnings. I personally think they're going through a little bit of a slower growth scenario where they've thrown a lot of things against the wall to try and increase growth versus their core earnings potential, which has been search. And I think some people are eating their lunch a little bit with search, whether it's Facebook, whether it's just other areas. So I don't have a Google thesis now. Google was my thesis in 2012 as my stock of the year when it was 600 to go to 800 up here. I don't like the way they did the 2-for-1 stock split. I think it's capital intensive. It doesn't have a real identity with traders. And just for me, the premiums will be high, and I don't see that much risk versus. I don't just see a great scenario here into earnings. For me, if you're a Google fan, it's come off the highs. It's been consolidating for almost a year between what is that 620 and 500. So it's not priced for perfection, but it's going to need a really solid report to or something different to shake it up to get a catalyst in there.
I have to agree
I don't
with
like
you on that stop split. I mean, every time I look at Google, I always want to look at the other one and then add the two up and see where, see where it's trading. But I think they did that just to take a little, not $1,000 stock, take a little focus off while they, try and realign and get going back in the right direction. One more for you here.
Oh, they should have done a 4 or 5.
Yeah, yeah. Why not?
That's why if Amazon's smart, it's coming out with earnings this week. We might as well talk about that too.
Sure.
They need to get a little bit better margins, show some earnings potential or power this quarter, and announce some kind of stock split. If they do that, I think it takes out the 390 pivot, just like Netflix took out that 485, and that could be a good trade there for traders. But they need to do a split because people are having a hard time trading the stock with, again, capital intensive. You can't really sink your teeth into it. Apple would not be where it is right now, in my humble opinion, if it didn't do the 7-for-1 and make it into a different type of trade. So we'll see what happens with Amazon. They're reporting on Thursday.
That is correct. Well, Scott, thanks a lot, Scott. A lot of great ideas for today as well as for the remainder of the week. Scott Redler, Chief Strategist at T3 Live, T3 Trading Group, joins us every Monday morning to set up the week for us. Thanks a lot, Scott. We'll talk to you again soon.
Thanks for having me, and good luck this week.